Palantir, about to soar or snap with BigBear.ai's growing potential. Could it be the next million-dollar opportunity while Palantir has skyrocketed over 2,000% since 2023, becoming the hottest AI stock on Wall Street? But with earnings just days away, tension is rising. Will August 4th mark its next breakout, or the beginning of a brutal pullback? The answer could reshape fortunes. Let's find out why. But first, to celebrate reaching 1,000 subscribers, we're offering a free guide that explains how top investors identify breakout stocks. Check the link in the description. If you find value in this video, please like, share, and subscribe so you don't miss out. And remember, this isn't financial advice. It is for educational and informational purposes only. Always conduct thorough research. Investing involves risks and some level of speculation. Thank you. Without wasting time, only a few names spark as much debate as Palantir Technologies ticker, PLTR. Once viewed as a black box contractor with murky operations, Palantir has emerged as a mainstream player, now crowned the best-performing AI stock of 2025. But as the stock approaches its all-time high of $160, many investors are asking tough questions. How high can it go? What will happen after the following earnings report? And could this become a trillion-dollar company, or is the bubble about to burst? Let's unpack the hype, separate the facts, and chart what might lie ahead, both after August 4th, 2025 and over the next 5 years. Palantir's recent success is not accidental. It highlights a clear shift from being a defense contractor to becoming a leader in AI. Although government contracts still play a significant role, the company's commercial sector is expanding rapidly. Its artificial intelligence platform has gained traction across various fields, including healthcare and logistics. Instead of relying on traditional marketing, CEO Alex Karp focused on product innovation, letting the results speak louder than any promotion. The result? U.S. commercial revenue increased 71% year-over-year in Q1 2025, while the adjusted operating margin reached 44%. This isn't just growth, it's efficiency on a large scale. However, it's also a matter of valuation at extremes. Palantir's rise has been stunning, up over 110% year-to-date and 2,290% since 2023. With a market cap now surpassing $374 billion, it's making its way into big tech territory. But here's the catch. Palantir trades at 274x forward earnings and over 120x revenue. To justify these extremely high multiples, it would need to perform flawlessly, quarter after quarter for years to come. Compare that to NVIDIA's price to sales 29 or the S&P 500 average price to sales 3.2, and you begin to feel the altitude. Still, bulls argue Palantir isn't a typical software company. It's the AI infrastructure layer for critical decisions. And if that's true, the potential might be much higher. What to expect on August 4th, 2025, Palantir's Q2 earnings are expected to be a market-moving event. Here are Wall Street expectations. Revenue, $937.5 million, plus 38% year-over-year. EPS, 14 cents, plus 55.6% year-over-year. If Palantir beats expectations, especially if it raises its forward guidance, the rally could continue toward $170 or higher. But what if it falters? Given the inflated valuations, a miss could trigger a quick correction, especially with momentum-driven retail traders heavily invested. This makes August 4th a critical inflection point. Can Palantir maintain its success? Here's where the story becomes even more compelling. While the market is still debating whether Palantir deserves its current valuation, long-term projections paint a compelling picture. Bullish analysts, such as Dan Ives and Piper Sandler, believe Palantir could reach a $1 trillion valuation by 2027. Some even forecast a $2 trillion milestone by 2033, hinging on its ability to monetize AI at scale across global markets. Here's what's driving those forecasts. Massive government deals, $800 million DoD contract. Partnerships with NATO, ICE, and the U.S. Army, $156 billion expected increase in U.S. defense funding for fiscal year 2026. Explosive growth in AI. Commercial adoption, AIP boot camps helping companies deploy in days healthcare, finance, and logistics are adopting Palantir workflows, 83% reduction in hospital placement time. Profitability is increasing faster than revenue. Focus on product over sales, lean, efficient, and sticky. However, execution must be flawless. As one analyst bluntly put it, Palantir is priced not just for perfection, but for miracles. But are these reasons enough to ignore the risks? No, because even a rocket faces drag. Palantir's sky-high valuation makes it susceptible to any misstep. Overvaluation risk, 122x price-to-sales ratio leaves no margin for error. Government dependence, changes in regulation or funding could impact revenue. Retail volatility, the Wall Street bets crowd gives and takes away competitive threats. Big tech companies such as Microsoft, Google, and Amazon are quickly emerging. There's also a geopolitical story connected to Palantir's growth. The re-election of Donald Trump and association with figures like J.D. Vance might boost defense spending, but could also bring unpredictability to Palantir's reputation and customer base. Still, the key question is it time to buy, sell, or hold Palantir stock? That all depends. Are you in this for the next few quarters or the next few years? Let's start with the short-term outlook. If you're closely watching the market and eyeing the August 4 earnings report, then timing becomes crucial. Should Palantir deliver a strong beat, surpassing expectations on both revenue and earnings, and if momentum sustains through analyst upgrades and social media buzz, there's a good chance the stock could surge toward $170 or even $180. In this case, buying now, even at higher levels, might pay off quickly, but the flip side is just as sharp. A disappointing quarter, missed guidance, or a cautious outlook from management could yank the stock back down toward $110, right around the street's average price target. If you're already holding shares, that might feel like watching paper profits disappear in real time. So, if you're already sitting on gains and trust in the long-term vision, a hold might be your best move. Secure your position, manage your risk, and wait to see if the storm passes or the rocket takes off again. Now zoom out. Think 5 years ahead. Are you betting that Palantir becomes the AI operating system for the world's most prominent institutions? Government agencies, multinationals, hospitals, and banks? If so, then every dip is a buying opportunity. This thesis supports the bold $1 trillion-plus market cap projections by 2027 or beyond. But maybe you're a cautious optimist. You see the promise, but also recognize the risks. Valuation pressure, surging competition from big tech, or the fact that sentiment can turn on a dime. In that case, you may prefer to hold steady, staying in the game without overexposing yourself. And if you're more skeptical, if you think the current price is more driven by narrative than by actual numbers, then it might be a good time to wait and see. After all, even great companies aren't always good stocks right now. Whether you buy, sell, or hold depends on your conviction and your timing. Palantir is either the next AI superpower in the making or a high-flying stock searching for its fundamentals. All right, that takes us to the following stock, one that some are tagging as the next Palantir, BigBear.ai, ticker symbol BBAI. Here's what investors need to know. In a market increasingly shaped by defense-driven AI innovation, BigBear.ai Holdings is gaining momentum, and not just among retail traders. With the stock surging 86% over the past 30 days, a growing chorus of investors is asking the bold question, could BBAI be the next Palantir? Let's break it down. From under the radar to frontline focus, BigBear.ai isn't some speculative AI play running on fumes. It's a growing defense technology player, backed by real contracts, a deep government pipeline, and a strategic shift that's starting to pay dividends. Despite still trading well below its 52-week high of $10.36, the stock is up a staggering 514% from its lows, making it one of the most explosive comeback stories in the space. And while most AI stocks have ballooned into premium valuations, BigBear.ai remains attractively priced, with a forward price-to-sales ratio of just 11.66, well below the industry average of 19.3. So, what's driving the surge? It starts with real-world utility. BigBear.ai is expanding its AI footprint in critical sectors, a $385 million backlog loaded with high-stakes government work. Contracts with the DoD, including the Joint Staff J-35 Orion platform and Project Linchpin strategic engagements in the UAE and across allied intelligence communities. From Conductor OS to ProModel, their platforms are already powering everything from airport surveillance to Amazon's warehouse logistics. This isn't vaporware. This is a tested, deployed, and operational AI system. Driving the new momentum is CEO Kevin McAleenan, whose sharpened focus has repositioned BBAI at the center of national security and global AI infrastructure. Under his leadership, the company has secured strategic alignment with prominent companies such as Palantir, Amazon, and Autodesk, validating its technology and signaling significant institutional support. These are not mere partnerships. They are stepping stones toward building an AI ecosystem that rivals Palantir's early-stage expansion playbook. From a technical standpoint, BigBear.ai is coiling near critical breakout territory. A push above $7.28 with volume could ignite the next leg up. Pullbacks to the $6 to $6.20 zone may offer prime entries for accumulation. If you're holding, momentum and institutional tailwinds suggest patience could pay off. If you're watching from the sidelines, the window may not stay open for long. Or is BBAI the next Palantir? It's not just possible, it's increasingly plausible. While Palantir has established its moat through years of government trust and commercial success, BigBear.ai is rapidly building its own. With strong leadership, an expanding backlog, active partnerships, and a timely focus on national security AI, BBI could very well become a strategic counterpart to Palantir, but with more momentum at this stage. For those looking to catch the next breakout AI defense stock before the rest of the market wakes up, BBI deserves more than a passing glance. And here's your challenge. In the comments, tell me, would you invest $1,000 into Palantir or BBAI today? Why or why not? However, please note that this video doesn't constitute financial advice and is intended for educational and informational purposes only. Investing in stocks is a risky endeavor, as past performance doesn't guarantee future results. We're expecting great potential in AI stocks, but we don't know which ones exactly, as we've highlighted some with stronger long-term fundamentals. Watch the following video.